One of the easiest ways to earn passive income is through receiving regular dividend payments. Today I'll be covering 5 of the best dividend ETFs that will pay you dividends, and watch to the very end because I'll be covering what exactly the dividend yield means for you in terms of money that will actually end up in your pocket. The first fund is the WisdomTree US Small Cap Dividend ETF. This fund's objective is to track the investment results of dividend-paying small-cap companies in the U.S. stock market. Here's a list of the fund's top 10 holdings, and since the WisdomTree fund focuses on small-cap companies, you probably won't recognize most or any of the names on this list. And as for the sector breakdown, this fund is most heavily weighted in the financials and industrial sectors. This ETF has an expense ratio of 0.38%, which is considered relatively inexpensive. For context, you would want to look for funds that have an expense ratio of under 1% at the very max, but I typically like to look for funds that have an expense ratio under 0.5%. In the case of this fund, a 0.38% expense ratio means that you will have to pay $38 annually for every $10,000 you invest. The WisdomTree fund has a 2.94% dividend yield, which is not bad at all. Now you may be thinking that is kind of low, but hear me out. One of the reasons that this fund still made my top 5 list is because over long periods of time, small cap companies have a history of outperforming the stock market overall. And that may be because small cap companies include the next big company that everyone will be talking about in the future. But the trade-off for that is that you have to be prepared for the volatility that can come with small caps. The WisdomTree ETF has a 10-year annual average rate of return of 7.05%, meaning that $10,000 invested in 2013 would be worth around $19,763.63 today, and that's if you did not add another penny into that fund during that entire 10-year period. So this is a pretty good start to our list, but it gets better. Next up is the S&P 500 Low Volatility High Dividend Yield ETF, and this fund is based on the S&P 500 Low Volatility High Dividend Index, which is comprised of 50 stocks traded on the S&P 500 that have historically provided high dividend yields and low volatility. Unlike the WisdomTree fund that focuses solely on small caps, this fund is mainly focused on value-oriented large and mid-cap stocks. Here's a list of the fund's top 10 holdings. You'll recognize some of these names like Verizon, Walgreens, and AT&T. And if you take a look at the sector breakdown, you'll notice that this ETF is heaviest in utilities, and close behind that is real estate, and this is due to the fact that the real estate sector is known for providing generous dividends. Speaking of which, this fund's dividend yield is 4.72%, which is very strong. And another great aspect of this fund is its expense ratio, which comes in at 0.30%. And this means that with $10,000 invested, you would pay $30. This fund has a 10-year annual average rate of return of 8.80%, meaning that $10,000 invested in 2013 would be worth around $23,242.83 today. The next fund you should look into is the Fidelity High Dividend ETF, and this fund seeks to provide investment returns that correspond to the performance of the Fidelity High Dividend Index SM, and focuses on large and mid-cap dividend-paying companies that are expected to continue and increase their dividends. Take a look at this fund's top 10 holdings, and I'm sure you'll recognize a lot of these big household names like Apple, Microsoft, P&G, Coca-Cola, etc. And reviewing the market sector composition of this fund, you'll notice that this fund is heaviest in information technology and financials. And one other thing about this fund that is different from the other 2 funds we've talked about so far is that the stocks in the Fidelity High Dividend ETF are not solely US based. Taking a look at the geographic exposure, you'll notice that a lot of this fund is heavy in North America, but you also get exposure to European and Asian markets as well. And this is great because the non-US allocation adds to the diversification of the portfolio. This fund has a healthy dividend yield of 3.27%, and the expense ratio is not bad at all, coming in at 0.29%. This means that for every $10,000 you invest, you will have to pay $29. Now, because this fund was created in 2016, we cannot currently look at the 10-year performance of this fund, but we can look at the 5-year performance. And over the past 5 years, this fund has averaged an annual rate of return of 10.62%, meaning that $10,000 invested in 2018 would be worth around $16,564.12 today. Now, this is pretty amazing, but get excited because the next two funds I'm going to cover will take things to the next level. Next on my list is the Invesco High Yield Equity Dividend Achievers ETF. And this ETF is based on the NASDAQ US Dividend Achievers 50 Index, which is comprised of 50 stocks that are primarily selected because they have the highest yields and have a history of increasing their dividend payments. You may recognize a few of the names in this fund's top 10 holdings like 3M and Verizon. And additionally, when it comes to the sector composition, you can see that there's a pretty wide variety, with the primary sectors being financials and utilities. This fund has an impressive dividend yield of 4.82%. But the one downside to this fund is its expense ratio, which is a bit on the higher side, coming in at 0.52%. This means that for every $10,000 you invest, you will have to pay $52. Even with this, the reason why this fund still made my top 5 list is because, especially in the recent years, it has proved to show relatively low volatility. Now, if you take a look at this chart, you'll see a huge dip in 2020 during the start of the pandemic, but then it does recover again and begin to trend primarily upwards without shockingly huge spikes or drops. The Invesco ETF has a great 10-year average rate of return of 10.77%, meaning that $10,000 invested in 2013 would be worth around $27,811.32 today. And the number one ETF on my list is the Schwab US Dividend Equity ETF. And this fund tracks the Dow Jones US Dividend 100 Index, which seeks after stocks that show promise of being able to continue providing shareholders with dividend payments. Looking at the top 10 holdings of the Schwab ETF, you will recognize names like Home Depot, PepsiCo, USPS, and Texas Instruments. And then when it comes to the sector breakdown, this fund is heaviest in industrials, healthcare, and financials. This fund has a great dividend yield of 3.57%, but what's even more impressive is the expense ratio, which is the lowest expense ratio of any of the funds I've covered today, coming in at just 0.06%. That means for every $10,000 you invest, you will only have to pay $6, which is just incredible, a great deal, and cheaper than a cup of coffee. To add to that excitement, this fund has some longevity since it's been around since 2011, and it boasts amazing returns, which is partially why it's number one on my list. The 10-year annual average rate of return for this fund is 11.72%. This means that $10,000 invested in 2013 would be worth around $30,290.70. Crazy good returns. Now that you know the 5 best funds, I want to break down what this actually means for you as an investor looking to make some easy passive income. And the first thing that you should know is that dividends are paid out on a per share basis. So how much money you actually receive will depend on how many shares of the stock, or in this case ETF, that you own. And there's an easy formula you can apply to figure out how much money you will actually receive. For this formula, you would take the dividend yield percentage, divide it by 100, and then multiply it by the current share price of the ETF. So let's use the Schwab ETF we just discussed as an example. It has a dividend yield of 3.57%, so divided by 100, and then multiplied by the current price, which is $74.13 as of the recording of this video. And that gets us to $2.65, which is the actual amount of money you would be earning per share of this ETF per year. So to figure out how much you would earn in a month, you would take 265, divide it by 12, and that would get you around 22 cents per month, which definitely is not a whole lot. In order to live comfortably off of your dividend payments, you have to own multiple shares. So let's assume that you go out and you buy 1,000 shares of the Schwab ETF. This would mean that you would earn $220.83 in passive income from the dividends. Now, this is money that you could use to pay for groceries, pay for your utility bills, or any other small bills that you may incur. But for people who live primarily off of dividends, they invest a lot of money up front in order to get those easy returns month to month. But don't be discouraged at all by this fact. I think it's great to start off small and then increase over time. And if you really want to get into the habit of investing and are looking for some ideas of investments to add to your portfolio, click the video on the screen to hear about 5 of the best Fidelity index funds.